Assalamu alaikum wa rahmatullahi ta'ala barakatuh. My name is Professor Dr. Azmi Omar. I am the President and CEO of INCEIF, the International Center for Education in Islamic Finance, a university that was established by Central Bank of Malaysia, Bank Negara Malaysia, focusing on Islamic finance. The topic that I'm going to share with you today is on the applications of Fintech in Islamic finance. As you are aware, the emergence of Fourth Industrial Revolution, as discussed during the World Economic Forum in 2015, talks about the advent of Fourth Industrial Revolution, whereby technology will now play a major role in the civilization today. The advent of technology is nothing new. If some of you may recall, way back during the Industrial Revolution, the first Industrial Revolution, the emergence of printing press came about. At that time, many people were against printing press simply because it eliminated the jobs of transcribers, people who transcribe the books, and those books were then distributed and sold in different parts of the world. With the emergence of printing presses, transcribers are no longer in need, hence books were able to be printed in huge numbers and distributed and sold in different parts of the world as well. So, Fourth Industrial Revolution is another revolution whereby the convergence of technology and human life becomes very prominent. In the context of Islamic finance, we see the emergence of digital technologies, particularly Fintech, used in Islamic finance. We know that currently in Islamic banking and finance, it has been growing very fast. In a number of countries, the growth rate has been more than 15% or 20%, or what we call double-digit growth. The growth is phenomenal. However, there are still many segments of the Muslim populations that are unbanked, particularly what we call the underserved market. One is because of religious factors. People do not want to be involved in banking because of the belief that in conventional banking there is riba, therefore Muslims will not want to participate in banking. Secondly, because of accessibility. In places that people want to have banks, but banks are hardly come by because of the location. And this is what we call accessibility. In certain towns, certain rural areas, it is not economical for banks to be established. It is very costly. They demand physical building, they demand employees, and in some cases, there are not enough employees of banks to be established. So as a result, Muslims do not participate in the banking sector because of those two reasons. In countries which have technologies, of course, people have more than one bank account. For example, in Malaysia, one person, according to one study, one person may have 2 or 3 bank accounts. So they are overbanked in that sense. So in countries, say for example, in Africa, in Central Asia, and parts of Asia, where people cannot access Islamic finance or rather access banks, then there are great opportunities for Islamic banks to come on board. How can they come on board in this particular case? One way is the use of digital technologies, or particularly fintechs, which means that banks need to use mobile applications in order to bring people into the financial sector. How it is done? If you look in a number of countries, banks will only need to see customers only once, i.e., customers will need to provide the initial information. The bank then confirms the customer, who the customer is, and this is the customer that claims to be this person A or B or C, and subsequently all transactions of banking can be done through online applications or through mobile applications. Of course, this requires that certain countries will have certain level of technologies in order to have mobile banking. But what we do see is that there is a lot of development going on in order to push mobile technology, internet applications in many parts of the world. Hence, using mobile applications Islamic banks can reach out to customers who are left behind. As I mentioned earlier on, once a customer opens an account, at one particular instance, the subsequent transactions can be done through mobile applications. How it is done is that all payments or all receipts are done through digital wallets, which also means that it is a great thing to customer, because bank customers need not go now to a bank branch which may be located in faraway distance from his or her own house or her own office or her own workplace. So definitely we see the emergence of financial technology, the usage of financial technology by Islamic bank will enhance the accessibility and the financial inclusion. More importantly also, we look at the issue of development of small and medium enterprises in the Muslim world. We see that many Muslims suffer due to lack of work. So one way to resolve the issue of lack of work is to create employment opportunities. How can they do this? How can we create employment opportunities? This is through the use of Islamic microfinance, which means that Islamic microfinance can be used as a tool to provide financing to small and medium borrowers. But how can we then get more of them involved in small and medium enterprises? This, again, one of the solutions would be to use Fintech applications. Customer only need to go once to a particular Islamic microfinance institutions to verify their documents, and subsequently all payments can then be channeled through these mobile applications. Not only this, we see the usage of sadaqah, zakat, and wakaf can also be done through Fintech applications. More importantly also, the use of blockchain and smart contracts will enable us to trace end-to-end, meaning that, say for example, somebody provide sadaqah to assist poor people who are using Islamic microfinance. Blockchain technology will enable us to see once money is being sent through a particular financial applications, the money will also be checked whether it is utilized for the right purpose to the right individual. Hence, blockchain will enable us to trace end-to-end. So this is what we call the issue of transparency. Using blockchain will enable us to see the transparency of the sadaqah money, wakaf money, as well as zakat money. Hence, we see a bright future on the use of fintech applications within the Islamic finance space. These applications through smart contracts, blockchains enable us to see not only from end to end, but also to build data about the behavior of Muslims who are using these financial applications. Just imagine, we talked earlier on about the usage of different contracts of Islamic finance. One of the challenges of usage of Islamic finance contracts, particularly musyarakah and mudarabah, is the issue of risk. Sometimes banks are reluctant to use mudarabah musyarakah because of the risky nature of the contracts. Customers may utilize that money, but subsequently they may not be able to pay off the financing amount due to a number of reasons. Of course, we know that in mudarabah contracts, if the reason is due to business reason, then the customer will not be forced to repay the fund. But if it is due to fraud and so on, the customer will be forced to repay the fund. So the question is, how do we assess the risk of customers? Obviously, as I mentioned earlier on, the usage of blockchain technology will be able to trace the behavior of how the customers utilize money over a long period. So once we are able to trace the applications and usage of money by customers over a long period, we will be able to build up information about the credit behavior of the customers. Subsequently, again using blockchain, we'll then be able to decide should a customer be given financing under mudarabah musyarakah. So that's the advantage of using fintech. Not only it is have strong traceability, it is transparent, it can build up data about customers' behavior, and subsequently it can help to provide credit information about the customer and hence promote the usage of different types of Islamic finance contracts, be it ijarah, murabaha, istisna, mudarabah, as well as musyarakah. Thank you very much.